thank you as always, and this time for tuning in to my 2,971st edition of Short-Term Trading Live with Oscar. Traders, thank you for tuning in. Of course, welcome. And this video is coming at you on a Thursday night for trading, Friday, September 19th, 2025. Before we get involved in what's on the board and speaking about trading on Friday, you need to know this. Trading is risky. You should know that. Put stops in, put them in first. Never trade without protective stops. This is a risky game. Volatility is getting grand. Put your stops in first. You'll live a lot longer in this business if you do that. What is on this board? Well, you guys have all heard me say this in the past, and now it's come to pass, and here we are. Boy, did the Fed miss an opportunity to do some good. So Jerome Powell decides, okay, I am going to lower rates a quarter point. Why just a quarter point? Why would you do that? If you're going to lower rates, you got to do something, make an impact, 50% if you're going to lower, and here's why. I have been telling you for months on end that there's a game that's been being played. A 25% basis rate cut is not going to do anything but inadvertently offer banks a chance to make more money. Why? I promise you that them dropping by a quarter point will not help the average American without adding new banking regulations. What does that mean? I have mentioned many times what's going on right now is the rate is kind of low at 4.25%. But we don't get to borrow money for mortgages, right? Not at that price. We're paying 8%. Why? Because banks get to borrow the money from the Fed now at 4%, and here's their game that they have been playing for months on end. It's akin to GameStop. What the big banks are doing is this. Powell lowers the rate. If the bond market goes down, the rates go right back up. Whether Powell lowered them or not, we pay the same mortgage, if not more. So the banks have been pushing down bonds, and even a few months back when we were lowering rates, if you remember that, we stopped lowering rates. The market started to drop. The bankers came in and immediately started messing with the bonds. Then we had a period, a couple of, before April, it was probably January, somewhere around there, where the same thing had started to happen again. So here's the clear picture. If you push the bond market down, it makes the rate go up. Banks push the bond market down. It doesn't matter what Jerome Powell or the Fed does right now. They're getting spanked. We're going to end up paying more for mortgages in a month than we were paying last month, even though they lowered by a quarter point. We have got to add some sort of banking regulations that tell banks, if you're borrowing it at 4, you cannot charge more than 6. Figure out how to make money at 2%. Borrowing from us, the Fed, at 4, lending it to people in this country at 7 to 8% is out of control ripoff. The rate is low at 4%. Another thing about our low rates. Right now, we're at 4%. God forbid another pandemic comes through, another COVID. Do you know that what saves us every time we have a big disaster like that, 2008? Do you know what saves us? We drop interest rates as quickly as we can and push them down near zero, and it buoys everything back up. If we got rates at 4 now and we drop them, let's say 2% in the next year, what the hell do we do when the next pandemic shows up? When the next 2008-9 crash shows up? What do we do? Do we then blame the Fed? You had points that you could have kept, but instead you lowered rates when you didn't need to. Now what do we do is what the cry will be. In other words, we've got a loaded gun with bullets in the chamber, 4% rates. If we keep lowering them and a disaster happens, we are fucked in plain English. This is no good. The bond market is what's controlling this. The banks are controlling the bond market. Jerome Powell can lower the rate 15 times, and unless the banks stop selling bonds and get told you can't have such a big spread, this is going to continue. It's a game that's been going on. It's like what they used to do to GameStop. Doesn't matter what the Fed does, the bonds are going to go down anyway. GameStop could have made $1 million a minute, and the stock wasn't allowed to go up because the short sellers wouldn't allow it. The short sellers are not allowing bonds to go up. we've got the same situation. Don't blame the Fed here. It is not the Fed. Rates are cheap enough. Ask our politicians to tell these bankers they got to rein this shit in because they're killing us when we go to buy something and they're getting the money very cheaply. Unfair. Call your senators, write to your congressmen, see if we can get some kind of play against these big banks just to calm them down a little. Allow us to participate in some of the profits too by giving us lower mortgages. That's my take on this. What else is out there, traders? Bonds don't look good because of the reason I just told you. However, you know what does? ES, NASDAQ, Russell, Bitcoin, real estate, you name it, it looks good. Why? They just lowered rates. All that does is push stuff up. If you think lowering rates is going to help people buy houses, all it's going to do is push the prices of houses even higher while the banks push the bonds lower and we pay more. We are screwed right now, kids. Something has to happen. However, we're traders. We're going to trade off of it. We're going to buy the dips and even the S&P, NASDAQ, Russ, something if we can get a fill tomorrow. We like buying dips in Bitcoin. Let me show you some great charts. You're going to love them, and we'll go from there. Be careful out there. Remember, this is all about the bond market right now. Jerome's doing what he can. Traders, Australia Omni Camp at the Gold Coast. It's happening in about 3 weeks. I've bought my tickets. I've rented the place where we're going to host the Omni Camp. I bought all your computers. Supplies are here. I'm ready to go. 7,500 miles from here to you in the Gold Coast. Are you willing to come see me from your little comfortable couch? Yes, you are. Come to OmniBootCamp.com. Go right now. Fill out your OmniCamp applications. If you are anywhere near Australia or in Australia, you want to spend 4 days and nights working with me to learn the Omni, which is Oscar's Market Navigational Indicator. If you want to learn that from me in its entirety, there's no second camp. You learn it all at one 4-day Omni Camp. Go to Omni Boot Camp right now. Australians, your time is limited. 3 weeks left. I'm getting on a plane and getting out of here. Make sure you fill out your Omni Camp applications now from Australia. Let's get this going. Traders, I want to show you some charts, but I want to remind you of something. What we do at the Omni Trading Academy is we put our stops in and then we keep our emotions out of trading. How do we do that? We put those stops in first, so we've got our protection on. We put the order in to get long or short, and then we say this to ourselves over and over again, and by now, you should know what that is. Stops are in. Emotions are out. Rock and roll, traders. Watch this quick clip, and then we will go look at some great charts.
Good afternoon, traders. Good evening, traders from across the globe.
Every time I've ever shown this to people, I have people that are like flag experts and they're flabbergasted. Say it with me. I will always place my stop first.
We're here at Omni Camp in Las Vegas with Oscar Carboni and a couple other gentlemen. Just came here mainly because I wanted my trading to be refined and defined.
The analysis I would use from trading without the Omni system was much more complex.
The genius of what we do is we've taken one of the most complicated things to do on this planet and simplified it to the point that I can sit here with 6th graders and they could easily do this, not even knowing how they're winning or why, but they could do this.
I know who the guy is because I've seen what he's done, but you don't know what the magic recipe is, right? And they get in here, and within almost the first day, the light starts coming on as to what his system is.
Anyone that's looking to join Omni Camp, if you have no experience, you don't care about any of that. All you care about is what the chart says. You'll be much better off for it.
There's almost a sense of relief that you see something, you have a plan, you see it, and then you go try to execute. That is brilliant.
And I think I got the discipline and everything I need to be successful with Oscar.
Omniacs, from Australia. Guess what? Omni Camp is coming to you. You don't have to go across the world. We're coming to you. Get ready. Go to OmniBootCamp.com right now. It's happening on October 17th. There's only one Omni Camp, and that is there for you. Make sure you go to Omni Bootcamp now and fill out your applications. Traders, E-mini S&P daily bar. The Fed lowered rates, and away we're starting to go already. We didn't need to lower rates because we've been in a bull market for a long time. Lowering rates is only going to make things even more bullish. Rock and roll, we'll take it with traders. NASDAQ, same thing. Look at that fantastic bar that was put in on Thursday. Look at the nice rally that we're getting. It looks like it wants to come up here. Nothing goes straight up, as we know, right? Things pop around and flip around, but we've been in a bull market for some time now without the Fed lowering rates. You better believe lowering rates only helps that bull market out. Then we've got this. Bitcoin. My goodness, you gotta love it. Traders, if you remember, once we got around here, I told you that you should be buying Bitcoin all the way down and then wait for it to come back up. Well, we did that, and we did it in a series of videos, plus I did it for myself, and now look, we're heading back up. We're broken out of the flag, right? Look at that. We're above the average. Bitcoin's looking good. They just lowered rates. You got to love what you see there. Come on, Bitcoin, go to 121 for us again. Let's get this thing up there. And then we've got this. Traders, I'm not touching gold for trading on Friday. It's been a really big booming bull. Just fell out of this channel. We've got a couple of down days in a row. Omni doesn't want me to touch it. I'm just going to stay away. So we're going to stay away from gold for trading on Friday. And here's where things get interesting. It is all about the bond market, traders. As I mentioned to you, whether Jerome Powell lowers, raises, or does nothing with rates, if the bond market goes down like this, rates go up automatically. Bonds go up, rates go down. Bonds go down, rates go up. That's the way this works. So when you see the 30-year market doing this, we're actually raising interest rates, even though Jerome Powell's not saying anything. So we've had this lately, which was kind of helpful, right? It was starting to go in the right direction. But Jerome Powell only did a 25 instead of a nice smashing 50 to force the bonds higher. That's going to allow the bond traders to come in and smack this right back down. When they get it here, it'll be higher interest than before Powell lowered rates yesterday. And then we've got the weekly, even more proof. Look at this average that has capped off the bond market on a weekly chart every time it gets there. It also creates a trend line. We get back there again, capped off. Look what just happened the day we raised rates. Got up there, and then Thursday you hit it perfectly and turned around and started to fall back down. Now you are below the resistance. You failed once again at the average. Believe me, the banks are paying attention. I promise you, they see this and they are going to take advantage of it. Traders, that's what I wanted to show you for today. I hope this helps. Please make sure you come on down to livewithoscar.com. Hang out with me in my free live trading room. We'll go over these rough and tumble markets and we'll live our lives together in the trading room.